Hello, everyone. Happy Friday to you all. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, before we kickstart the session, let's quickly confirm that we are on the same page. That is, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. So I need to see your feedback so that we can get this session started. Yes, okay. So I can see a handful of comment here. Ramona85, good morning. Glad to have you around. Manza Ali, good morning to you. Dimo, good morning. Riados, I see your comment too, Carrie. Thank you very much. So I will take this as a positive feedback that we are good to go this morning. So it's on this note I welcome us all again to another exciting edition of the Extra Speed Live as we head into the last trading day of the week. Well, today is a very important day. Well, first of all, the fact that today is the last trading day of the week comes with its own psychological peculiarity, as majority in the market will be looking forward to rounding off on their trading positions, scoping in their profits ahead of the new week of the weekend. And this usually reflects on the chart in form of technical reversal patterns insinuating price moving in the opposite direction of the prior leading price action. So we are going to be taking this into consideration too as well. Then another thing is that we're looking forward to the NFP data, which is on everyone's radar to see how we are going to be monitoring the trajectory of the price of the US dollar going into the end of the week. So we are going to be taking all this into consideration. In fact, since the beginning of the week, we've been monitoring four major assets on our watch list, which includes the USOILSPOT, the GBPUSD, the USTech100, and the XAUUSD, which is popularly known as the gold spots. And in fact, we've been doing pretty well across these assets since the beginning of the week. And in preparation for today's trading session, I have done a comprehensive analysis on this asset just for you so that we can all get ourselves ready for the New York session using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain insight into these market conditions of these assets. For those of you who are joining us for the first time, you are highly welcome on board. And in fact, I'm very glad and excited to have you around with us. You might be asking, what is this all about? Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions. Our main focus is preparing for the New York session by utilizing fundamental tools. The session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I highly recommend that you stay tuned in during this time so that you do not miss on the insights that we will be sharing during the course of the session. And by being active participants in the comment section, you will gradually enhance your understanding of our analytical approach. Let me let you know here that our aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. Once again, I extend a warm welcome to you. So with that being said here, we will be diving right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of us who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event from the economic docket that affects the assets on our watch list. So for this week, based on the asset we are looking at, we shall be focusing on the United States and the United Kingdom. Now, Friday, November 3, today, we have 4 high-impact events we will be looking forward to, and all of which are coming in from the United States. Now, the first event we're looking forward to today is the average hourly earnings, which is coming up in about 2 hours from now. And for those of you who don't know, this data is released by the U.S. Bureau of Labor Statistics, and it's considered to be a significant indicator of labor cost inflation and of the tightness of the labor market. Now, a high reading is considered as positive for the US dollar, and while a low reading is considered as negative. Now, if we look at the previous data for the average hourly earnings for the month of September, we can see here that it came in at 0.2%, and we have economists projecting 0.3% for the month of October. So will it fall as expected, or are we going to be seeing situations where the data will come in either beyond or below expectations? Then simultaneously, we will be witnessing figures from the non-farm payroll, another event that everyone has on his radar for today to determine the trajectory of the US dollar ahead of the weekend. Now, for those who don't know, the non-farm payroll is released also by the US Bureau of Labor Statistics, and the figure represents the number of new jobs created during the previous month in all non-agricultural businesses. Now, one thing about this event is that a high reading is considered as positive for the US economy, which in the long term will dovetail to positive traction in favor of the US dollar. Now, for the previous month of September, the data came in at 336,000, and we have economists projecting a 180,000 for the month of October, which is way below the previous data. So we look forward to see what the actual data is going to be like on this one. Then in about 4 to 5 hours from now, we have the ISM Services PMI. This is an index released by the Institute for Supply Management, and it shows the business condition in the US non-manufacturing sector. So a positive data here, anything above 50 is considered as positive for the US economy. Now, the previous data came in at 53.6 for the month of September, and we have economists projecting 53 for this month of October. So it's a little bit on the lower side here. So they're expecting a little bit of contraction in that sector. So these are the high impact event we are looking forward to today. And in fact, we all know that the anticipation of this event alone has a tendency of influencing market sentiment, which would reflect on the chart as price action. So talking about price action, let's dive right into the chart to look at things from a technical standpoint. So as usual, I'm seeing my US oil chart taking quite a long time for it to load up. So we shall hold on a little bit to allow the chart. Okay, here we go. So the first asset we're looking at for today is going to be the US oil spot. And in fact, we've been doing pretty well, let me say fairly well, since the beginning of the week. Remember, we sold at the beginning of the week. We had a couple of sell positions, which allowed us to scoop in over 250 pips in profit as at the first half of this week before we begin to notice buy traction resume around the $80.85 and the $80 area. Now, for the sake of clarity here, I would like us to run through how the week started for us in this community and what led to the decisions we make. And in fact, this will also be an avenue for those of you who are not part of our earlier sessions to be on the same page with us. So at the beginning of the week on the US All Sport, we initially identified a range where we saw price confined within the $84.60 level and the $83.85 zone to give us an insight into the uncertainty that gripped the market during the first 12 hours of this week. And of course, you know how we do it in this community. Whenever we identify this kind of range, we do exercise patience and wait for signals to either come in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And at no point in time did price go anywhere close to this resistance line, so it was more of trying to break down the support line during the early hours of the new week. And finally, we saw the breakdown retest of the support line to incite our first sell position for the week. And since then, we have been selling, and in fact, we rode the momentum all the way into that zone between the $80.85 area and the $80 area to scooping over 250 pips from two sell positions. However, on Tuesdays and Wednesdays, we begin to notice some buy traction resume around this area. And in fact, we also had this descending trend line as a yardstick to guide our trading decisions for the week. And one of the things we agreed here was that as long as price remains below the descending trend line, we shall be looking out for selling opportunities. And the only condition that will make us consider buying the US All Sport is for price to breach and break out of that descending trend line. And of course, we saw an attempt on Wednesday's trading session, which gave us about 100 pips before sellers came in to take us out of that position. And of course, during our live session yesterday, we acknowledged that that area between the $80.85 zone and the $80 area had been characterized with a lot of buying pressure since Tuesday's trading session. And as a result of this, we decided that anywhere above the structure will be giving us an opportunity to buy, and that if price finally breaks out of that descending trend line, we will be joining an uptrend move. And in fact, we saw what happened here. Price did break out of the descending trend line, came back to do multiple retests of the structure during the New York session to incite this uptrend move all the way into the $82.80 zone. So in fact, we had about 2 buy positions running, and for those of us who took advantage of this opportunity, and if you still have your buy position running, the first position is running with about 115 pips in profit, while the second position is just right at the break even. Well, personally, I have been taken out of this position after moving my stop losses accordingly, and I do hope you did move your stop losses, as you all know how we do it in this community. Whenever price action moves significantly in our favor, we of course want to move our stop loss and secure the current position. So if you had moved your stop loss, you would have been out of this position with a moderate size of profit. And for those of you who still have the buy position running right now, then I will be advising you to ensure that you protect all your positions right now and secure the position, because there are potentials of selling opportunities coming in here. One, basically because of the barrier around the $82.80 level. And of course, remember that we are looking forward to the NFP data, which has a tendency of influencing volatility in this market. Now, with a well-secured position at this juncture, what is going to be our next line of action? What are the chances that buyers have in this market, and what are the conditions we want to see here that will make us look out for selling opportunities? Now, if we look at things from a fundamental perspective, it is quite clear that oil prices have continued to rise for the second day in a row, driven by an increased appetite for risk in the market. Now, this belief that we're witnessing is as a result of the Federal Open Market Committee, that is the FOMC, reaching the peak of its interest rate hike, hereby boosting oil prices and putting pressure on the US dollar. Additionally, escalating tensions between Israel and Hamas are pushing up prices for crude oil. However, there is a risk that conflict could spread throughout the region, potentially causing disruption to oil prices. And because of this sentiment of disruption in oil prices, we might likely be seeing an uptrend traction, which we've obviously been noticing in the last 24 hours. Now, with this information we have gathered from the fundamental perspective, let's take a quick look at the technical side of the structure. But before we go into the details of what our expectations will be like for today, I would like us to quickly run through the higher time frame so that we can have an holistic perspective into what is really going on in this market. And if we do so, we would want to allow those who missed out on our earlier session to be on the same page with us, and at the same time do a quick refresh of our memories of what we saw at the beginning of the week. So the first point of contact for us at the beginning of the week was on the daily time frame, and the first thing we noticed is that key level around the $85 area. In fact, this level had played a major role in determining the direction of price action in the last over a year now, to be precise. And as you will see that the price broke down the $85 area in the month of November last year, and throughout this phase between November and September of this year, price traded below the key level at the $85 level, not until the month of September that we saw price broke out of that $85 level. Now, in the last 3 to 4 weeks, price came back into that zone. As we can see, a lot of consolidation phase happened around this area. So it's more or less a sign that of how that $85 area should be considered as a significant level based on this current market structure. Now, in addition to that key level is this couple of ascending trend line we spotted after monitoring the character of price action since the month of April. In fact, we have a couple of them, and you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to look out for buying opportunities. But if at any point in time price breaks down the ascending trend line, then we might be considering a momentum shift. Now, if you look at what happened in this market since the beginning of this week, you will see here that price action did finally broke down that first ascending trend line here, with a potential of a move back into the major ascending trend line, maybe in anticipation of an uptrend move, or we might likely be seeing price do some retracement back into the 85 area to climb it up or retest it to incite a downtrend move. Now, with this information we've gathered here on the daily time frame, we want to scale down into the 4 hours time frame where we had a setup to use to guide our trading decisions for this week. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action throughout the month of October. And at the beginning of the month of October, it was more of a strong bearish impulsive move as we saw price drop into the $81 zone. And one interesting thing about the $81 zone throughout the month of October is the fact that price was unable to break through that area, which reveals how sellers struggled at any point in time price comes into this area. We saw buy pressure within the zone. We saw it happen here again. And in fact, in the last 60 hours, we saw a lot of buy pressure around this area despite the strong bearish momentum that started this week. And this tells us a lot of things about the character and psychology of price movement in this current market, as you will see that majority in the market consider the $81 zone has a cheap price to buy the US oil spot. And in fact, based on this observation, we have a demand zone along the $81 area. And as long as price continue to reject this zone, that is, sellers find it difficult to break through, we will continue to consider buying opportunities above this level. Now, during our live session yesterday, considering the fact that price still remains above the demand zone, we considered buying unless price action break through the demand zone and drop to the downside. So as long as price remains above the demand zone, we have decided that we'll continue to buy the US oil spot. Now, scaling down into the 1 hour time frame so that we can see how to position ourselves for each trading session, we had this beautiful setup gradually unfold all our chart. Now, the first thing we took into consideration on the lower time frame is our descending trend line. In fact, this line here is played a major role in determining how we are going to be positioning ourselves for the next move throughout the course of this week. And you know how we use our descending trend line. As long as price remains below the descending trend line, we look out for selling opportunities. And as soon as price breaks out of the descending trend line, then we want to be buying. Now, we bought at the breakout and we still have a buy position running for those who still have a position running at this point in time. And one thing you will notice here is that as soon as price climbed above the $82 level during the later part of the New York session yesterday, we can see here that price has been caught within a consolidation phase, confined within the $82.80 level and the $82 area to emphasize the level of indecision at this point in time. Now, you know how we do it in this community. Whenever price action falls into this kind of range, we want to exercise patience and wait for significant signal in the form of a breakout or breakdown of that range to give us an opportunity to either buy or sell. Now, let's talk about the potentials the sellers have in this particular market. Now, if you look at this structure closely and consider what has been going on here since Monday's trading session, you will see how the $82.80 zone had played a major role in negating all attempt by the buyers to break out of the structure. Look at what happened here. We continue to see selling pressure here as buyers struggle to break out of that structure. The same thing also happened here on Wednesday as we saw another sell pressure negate the bullish attempt. Now, in the last couple of hours, price action is gradually back into that zone, and in fact, we begin to see another selling pressure. And in fact, in the last hour, we saw an engulfing candle pushing price back into the $82 level. Now, the question going into today's trading session is that will the sellers persist here to push price to the downside, or are we going to be having a breakout of this level to take out all the sell position here and incite an uptrend continuation? Now, let's take a technical dissection of the breakout of that descending trend line first of all. Now, from a technical standpoint, whenever we witness the breakout of a descending line or a structure like this, we expect that some point in time price is likely going to come back to retest the structure in anticipation of another wave of bullish momentum. So if the sell pressure persists below the $82.80 level, we might likely be seeing price drop to the downside, maybe in an attempt to test the structure and incite an uptrend. And in fact, if it does breaks down that level, then we want to be considering more selling opportunities. So now, how do we capitalize on a bearish move if that is what the market will be doing today? Now, for us to capitalize on a bearish opportunity here, I would like us to wait for price to break down that $82 level before we can start taking advantage of a counter trend opportunity. So if you feel comfortable taking a counter trend opportunity, well, a breakdown retest of the $82 area may be a beautiful opportunity to join a bearish move, and we will be looking at a minimum of 120 pips if price culminates at the $80.85, or a maximum of about 200 pips if price culminates around the $80 zone. Now, that is one way we are going to be looking at this. So if price drops below the 82, retest the structure, then we want to join the counter trend opportunity. However, in as much as we're looking out for selling opportunities around this area, we cannot ignore the potentials of buyers. Of course, you will see here that since the beginning of this week, this zone here had continued to negate all sellers' attempts here to push price further to the downside. As you will see here on Tuesday, we saw what happened here on Wednesday, and we of course saw what happened here yesterday's trading session. So it shows here that buyers are really dictating the pace from this point. So to buy the US All Spot, if price drops into this area, I will be looking out for reversal patterns to join the uptrend. And in fact, if price does not get that far, then a breakout of the $82.80 level will be all we need to join an uptrend continuation. So let's mark these levels out on our chart, as our center of focus for today's trading session is basically within the $82.80 level, and of course the $82 area, where depending on the direction of the breakout will give us an insight into the trajectory of price for these assets. Now, if price continues to climb up, remember we have multiple levels that we will be using to maximize the potential of this bullish move. So we have the $83.85, we have the $84.60 level, and finally we have the $85.50 area to capitalize on more buying opportunities. So let's see how the market will react to that range. So like I said earlier, our center of focus is between the $82.80 and the $82 area, where depending on the direction of the breakout will inform us what our next line of action will be. So these are my views on the US All Spot. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, allow me to move on to the next asset on our watch list for today. So the next asset on our watch list for today is the USTech100. In fact, this is the most profitable asset amongst the assets on our watch list for this week, as we were able to scoop in over 1,300 pips in profit on the USTech100 since the beginning of the week. As you all know, we maintained a bullish bias throughout the course of this week. Now, before we go into the details, let's run through how the week started for us in this community and what led to the decision of buying this asset. Well, at the beginning of the week, the first thing we observed on the 1 hour time frame was this bullish gap, as you will see right here, giving us an insight into the sentiment of the institutions during the course of last weekend. And then this was something that we build upon to drive this price movement to the upside. Then in addition to that, we confirmed here that there was a consolidation phase which emphasized the level of indecision at the beginning of the week, as we saw our price was confined within the 14,270 level and the 14,225 level to give us clues into what is going on at that point. And of course, you know how we do it in this community. Whenever we have this kind of range, we want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And one interesting thing at the beginning of the week was the fact that no point in time did sellers break through the 14,225, hereby negating the idea of even considering selling this asset. But instead, we continue to notice our buyers were strongly knocking through the ceiling of that resistance line. And in fact, you will see here that throughout the first couple of days of the week, it was more of breaking out, retesting the resistance line of that range, giving us the privilege of joining a buy position. And remember that we also had multiple levels to add more positions. We had levels such as the 14,320. We also had levels like the 14,420 area. So we had a minimum of 3 positions running in profit prior to yesterday's trading session. And we did identify another level at the 14,840, where we said if price does break out of that structure, we will be adding more buy position to our existing trade. So currently we have 4 positions running in profit, with roughly over 1,300 pips in profit at this point in time. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, with a well profitable position at this juncture, our next action here is to move all stop losses and secure the current buy position we have right now. And based on what we identified here yesterday, the 14,840 zone is going to be an area where we shall be placing all stop losses for the current buy positions we have. And one thing we should take into consideration is that we need to give room for price action to breathe, as we could still have the potential of an uptrend continuation, and we do not want to be taken out while the market is retracing in anticipation of an uptrend move. So with a well-secured position at this juncture, what is going to be our next line of action for today? How do we intend to capitalize on the next move? Are we going to continue buying the USTech100, or because today is the last trading day of the week, are we likely going to be seeing some profit-taking activities? Of course, we know that we have a one-way traffic for this week, as price action has been rising all the way to the upside, and majority who had bought at a very cheap price may want to start considering closing in some of their position, which could reflect on the chart as a retracement move to the downside. Now, before we go into making a decision for today, it is important that we take a quick look at the higher time frame. Let's refresh our memories on what we saw here, and of course, those who missed out on our earlier session have the privilege of being on the same page with us. Now, at the beginning of the week, our first point of contact was the daily time frame, where we saw how price had consistently found higher lows in this market, hereby giving us an ascending trend line to work with. And of course, this is quite clear that since the beginning of the year, price had consistently respected that trend line, and not until a couple of weeks ago we witnessed the first time price will break down that ascending trend line and the 14,650 zone to incite a potential momentum shift. And of course, you know that whenever we identify a breakdown of a trend line such as this, we expect that at some point in time, price may come back to retest that structure to incite a downtrend scenario. Now, with this in mind, we capitalize on this bullish move as we rode it all the way to the upside, and right now price is back into that ascending trend line. Now, you would agree with me that we are at a crucial juncture in the market right now, as we do not know how the market is going to react to this trend line. So is price going to reject it, retest it, like giving us indications of selling pressure below the structure to incite a downtrend move? Or are we going to be seeing price breaking out of that trend line to incite an uptrend scenario? Now, for us to have a better perspective into what is going on here, we will need to scale down to a much more lower time frame. But before we go into the 1 hour time frame, I would like to refresh our memories as to what we saw here that guided our decision yesterday on the 4 hours time frame, and that is the 14,840 level, a level which had played a major role in determining the direction of price action throughout the month of October. In fact, we can go to as far back as the mid-month of September, as you will see here. Now, if we go to as far back as September, you see how this level was initially a selling niche. We saw this area selling niche. We saw the breakout of the structure here at the beginning of the month of October. Then price action broke down again, and during the second week of October, we saw retest of structure during the last week of October. And as at this month, we saw price action has broken out of that level. Now, during our live session yesterday, we emphasized how crucial that juncture is, as we said that if price will break out and retest the structure, we definitely want to be looking out for buying opportunities to join the uptrend continuation. However, if at any point in time price breaks down the 14,840 with continued selling pressure below the structure, then we might be witnessing a profit-taking activity which will retrace back into either this ascending trend line or the 14,400 to incite an uptrend move. And in fact, if price does break down the 14,840, we are looking at a minimum of 350 pips to catch here, or a maximum of over 500 pips to catch if price action goes to as far as the 14,300 area. Now, this is a very interesting situation we have here, so we are only going to consider selling if price action breaks down and retests the 14,840, and consider buying only if price breaks out of the highest point price action has gotten to for this week at the 14,930 area. Now let's scale back into the 1 hour time frame, which is our execution time frame. So from what is going on here, it is quite clear that price action is currently caught within a phase. As you will see, price is confined within the 14,930 and of course the 14,840 area, to emphasize the level of indecision going on in this market. Now, in addition to that indecision, I want to acknowledge the ascending trend line that we have here. In fact, I have a couple of them. We have the temporary one here after connecting the series of higher lows since Tuesday's trading session, and we have the major one right here. So you know how we use our trend lines in this community, right? We want to wait, we want to continue looking out for buying opportunities if price remains above this ascending trend line. So if that is going to be the case, then I want to see price action break out of the resistant line of this new range that we've identified here to give me an opportunity to join an uptrend continuation. However, if price does the opposite in this case scenario and instead goes to the downside, breaking down the 14,840 area, then price would also have broken down the ascending trend line, and this could be the beginning of a sell-off in this market, a retracement, or let's say a profit-taking activity. Now, if the breakdown of the 14,840 happened, price would have also broken down the ascending trend line, which would be the first time this will happen for this week. Then we want to start considering selling. Now, remember that we are not jumping into conclusions here, as we want to look out for we want to look out for confirmations before we jump into the position. Now, there are two ways to which you can capitalize on this one. If you're already profitable so far this week, then you have the confidence of placing a sell stop order below the 14,840 to capitalize on the bearish move. And if it doesn't work, you know that you are only risking some of the profits you had made so far this week. However, if you are new with us, then you want to wait for confirmations to happen, like a retest of structure, giving us signs that buyers are finding it difficult to climb back above the ascending trend line to give us an opportunity to sell this asset for today. So that is how we are going to be managing our positions on the USTech100 today. So our center of focus for today is basically between the 14,930 and the 14,840 area, where depending on the direction of the breakout will give us an insight into the trajectory of price action for today's trading session. So these are my views here. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off and wait for your comments or questions before we move on to the next asset on our watch list. So in the absence of no questions, I want to assume that we are all on the same page. So I see your comment, Smush. Good morning to you. Ramo Anna says good morning one more time. I think I saw your good morning earlier. Well, thank you for checking in on us. So in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, let's move on to the last asset on our watch list. Oh. So, sorry about that, it's not the last asset. The next asset on our watch list is the GBPUSD, which has been doing pretty well since the beginning of this week. Remember, we kept on a bullish bias on this asset as we had this technical ascending trend line, which has been guiding our trading decisions since the beginning of this week. Following the Bank of England's decision to keep interest rates unchanged and supported by a weaker US dollar, the pound sterling closed around the 1.2220 zone during yesterday's trading session to register the highest level in the last 1 week. During the press conference yesterday, the Bank of England made mention of something very, very important that we want to hold on to as a leverage to guide our decisions for today, and that is the fact that he hinted at the possibility of an additional rate hike in the nearest future, but he vehemently dismissed the idea of rate cuts at any point in time. And as a result of this, the pound sterling is attracting buyers as the US dollar struggles from the aftermath of the Fed's interest rate action and ahead of this crucial NFP data coming up today. And we all know what this simply means from the comments he said yesterday as regards to potential rate hikes and the knocking down of the idea of any rate cuts in the nearest future. So it shows that there are still potentials to increase interest rates, which is an attractive window for investors to increase their return on yield. Now, with that being said, we've been seeing some bullish traction in that regard in the last 36 hours. Excuse me. Now, let's look at things from a technical standpoint, and what is it that we saw at the beginning of the week that gave us the confidence of considering buying this asset? Well, the first thing we saw on the GBPUSD was the couple of ascending trend lines here after connecting the series of high and lows. So we had the trend lines, and of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to hold on to a bullish bias, and at no point in time did we see price did a breakdown retest of that trend line to negate the idea of buying. So we were never thinking of selling at all throughout the course of this week. Then in addition to that trend line, we spotted a range where price was initially confined within. That was between the 1.21330 level and the 1.21060 area to emphasize the level of indecision at that point in time. And for the fact that price remains above our ascending trend line, we were holding on to the buyers of buying anywhere above the 1.21330 level. And in fact, if you look at the structure closely, you will see that throughout the first half of this week, we notice how the 1.21330 area became a robust platform for buying opportunity. And since that moment, we have been buying this asset and we continue to add more positions at the breakout of levels such as the 1.21600, 1.21750, and of course the 1.21990, which was the last level we identified during our live session yesterday. And for those of you who took advantage of these opportunities, you will currently be running with a minimum of 150 pips from a minimum of 4 positions in profit at this point in time. So well done and kudos to everyone who was part of this profitable journey. Now, the next thing we want to be doing right now is to ensure that we protect our buy positions, that is, move our stop losses right now and secure this current position. Now, to secure this position and based on the current market condition, I will suggest that anywhere around the 1.21990 and the 1.21800 level seems most appropriate to secure our position. So anywhere around this area seems reasonable to place our stop losses, as you know we want to give enough room for price action to breathe. Now, with a well-secured position, what is going to be our next line of action? Well, the fact that price action is yet to break down those ascending trend line, we have no business considering selling the GBPUSD. And considering the potential rate hike from the Bank of England and the potential rate cut from the Fed Reserve, which was projected for June 2024, it appears that the pound sterling may begin to gain more popularity than the US dollar. So in preparation for today's trading session, what I did here was to acknowledge the highest point price was prior to the live session. As you will see, the highest level price action has gotten to for this week is around the 1.22200 level, where we saw selling pressure resume during the New York session yesterday. Now, for me to consider buying the GBPUSD today, I would rather want to see price breakout and retest the structure to incite an uptrend continuation. So we're still looking out for buying opportunities in this particular market. Now, there are two ways to which you can capitalize on this one. Well, the first one is placing a buy stop order above that area, and this is only for those of us who have been part of this profitable journey since the beginning of the week, as we can afford to risk some of the profit we had made so far to test waters around that area. And if it works out, very good for us, and if it doesn't, we know that we are only risking some of the profit we have made so far this week. However, if you are joining us for the first time, I will suggest that you exercise patience and wait for a retest of structure before jumping into any position here. Now, while we hold on to a bullish bias here, I want to mention that there are some factors that could happen here that will make you want to be in doubt of this bullish bias, such as strong selling pressure coming in anytime. And even if a selling pressure comes in anytime, it would not make any sense selling, because remember, we still have this ascending trend line around here, which also has a potential of still pushing price to the upside. So as long as price still remains above this ascending trend line, there is no business looking out for selling opportunities. Now, the only condition that will make us consider selling the GBPUSD is for the ascending trend line to be broken to the downside. And only when the ascending trend line is broken can we start considering selling the GBPUSD. And one thing I would like to state here is that we are not jumping in right away if the breakdown happens, as we will want to wait for confirmations to happen in the form of a retest of the structure confirming to us that buyers are finding it difficult to climb back above the ascending trend line to give us an opportunity to join the bearish move. So the only condition we look out for to sell the GBPUSD today is for price action to break down the ascending trend line. So that is what we are going to be doing today on the GBPUSD. So let's see how the market will react to this price level. At the 1.2220 level, a breakout of course is welcoming the buy position, and let's see how this plays out. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off. Let's see if there are any questions before we move on to the last asset on our watch list. So in the absence of no questions, let's take this as a confirmation that we are all on the same page. So I will be moving on to the next asset on our watch list. So the final asset on our watch list for today is the XAUUSD, my favorite, which is popularly known as the gold spot. Well, gold prices continue to attract buyers for the second consecutive day, maintaining their modest intraday gains as we gradually approach the NFP data coming up much more later in the day. Well, for me, the ongoing belief that the Federal Reserve is edging closer to the conclusion of its policy tightening campaign, coupled with the speculations about potential rate cuts in June 2024, has kept the US dollar bulls on the defensive at this point. As you will see, price maintains above that robust demand zone we identified around the $1,980 zone. Now, these factors, along with geopolitical unrest in the Middle East and concerns surrounding a slowdown in the Chinese economy, are acting as favorable winds for the safe haven status of the gold assets. Now, with the way things are going right now, it's quite clear that the market has been consolidating in the last 3 days now, ranging between the 1,990 area and of course the $1,974.50 zone, to emphasize the level of indecision at this point in time. And for me, I'm suggesting that market participants are exercising caution, refraining from aggressive bets, and opting to wait on the sidelines in anticipation of the NFP reports, which could offer vital insight into the Federal Reserve's rate hike trajectory. So as a result of this, we will need to exercise quite a lot of patience. And of course, you know how we do it in this community. Whenever price action falls into a range such as this, we usually exercise patience and wait for significant confirmation such as the breakout or breakdown of that range to give us an opportunity to buy. But currently we are in a buy positions. Let me emphasize this. Remember, during our live session yesterday, we acknowledged our key level at the 1,980 area and the 1,975, which had played a major role in negating all attempts by the sellers to break through this area since last week Wednesday. As you will see here, we saw buying niche. Sellers found it difficult to break through. The same thing happened on Thursday of last week trading session. We saw the same thing happen on Friday, inciting that huge impulsive move to the upside. And during Tuesday's trading session, we saw buy pressure here. We saw what happened here on Wednesday. And in fact, during the Wednesday's trading session, we saw this too as well. And during yesterday's New York session, we saw another rejection of that area. So you will see how this area had played a major role in negating all attempts by the sellers to break through that area. And coupled with the descending trend line we marked out here, remember we had this descending trend line since the beginning of this week. And one of the things we deliberated on yesterday is that a breakout and retest of that trend line would be a beautiful opportunity for us to join an uptrend move. And for those of us who missed out on this one, you will see how the market came back to retest the 1980, just exactly around that demand zone. In fact, we had multiple rejection of that area to inside an uptrend continuation. Now, for those of us who took advantage of that one, you will currently be running with about a 80 pips in profit right now. And of course, if you are taking advantage of the breakout of that range at the $1,986.50 level, you will be currently running with about, let's see, about 20 pips. So we have roughly over 100 pips in profit on the XAUUSD as at this point. Now, with a profitable position on the XAUUSD, it makes quite a lot of sense that we move all stop losses as we anticipate the NFP data today, which has a tendency of influencing some volatility in this market. So it is appropriate that we move all stop losses anywhere below the 1983 and the 1980 area. Secure this position. Remember, we are giving enough room for price action to breathe. Now, with a well-secured position at this juncture, what is going to be our next line of action? Well, personally for me, I want to consider buying the XAUUSD. I want to consider holding on to the bullish buyers on the XAUUSD. And of course, I made mention of some fundamental factors that are supporting this idea, like the slowdown in the Chinese economy, the escalating tensions in the Middle East, the U.S. Treasury yield nosediving to the downside too as well is also not in favor of the U.S. dollar as well, hereby supporting safe haven asset such as the gold. So one of the things I want us to hold on to here is that we remain bullish on the XAUUSD. Now, with the situation we have here, looking at the structure from a technical standpoint, there is something peculiar about the $1,990.60 level, which has been holding this position since Tuesday's trading session. Now, let's look at this together. Now, look at what happened here on Tuesday. We saw selling pressure here, you see. Buyers found it difficult to break through. We saw what happened here again on Wednesday. Buyers found it difficult to break through. And during yesterday's trading session as well, we saw how buyers found it difficult to break through that area. So what this simply tells us is that sellers are very, very strong around this area, and this zone could be considered as a supply zone at this point in time. And right now, price action is gradually approaching the $1,990.60 level as we edge closer to the release of the NFP data. So if we are going to continue buying at this juncture, we might likely be seeing another breakout of the $1,990.60 level, which I will need to happen here to add more buy positions to my existing trade. So I would like to see price take out all the sell positions here, retest of structure, give me more opportunity to buy. And if price action continues to climb to the upside, breaking out of the 1995 area, we welcome more buy positions, and another breakout of that psychological level at a $2,000 mark will welcome more buy opportunities. So let's see how this is going to play out for today as we get prepared for the NFP data coming up in about an hour from now. However, in as much as we're looking out for buying opportunity, we cannot ignore the potentials that sellers could come in at any point in time. Of course, we have seen what has been going on around the $1,990.60 level since Tuesday's trading session, as buyers are finding it difficult to break through this area. And in fact, if the selling pressure persists, we are likely going to be seeing a crash. Now, for me personally, for me to sell the XAUUSD, I would rather or feel comfortable selling this asset only if this demand zone is taken out by the sellers. So for me to consider selling the XAUUSD, I would rather want to see a significant breakthrough of the structure, bringing price back below that descending trend line, and if possible, retest of structure confirming that truly we are going further to the downside. So that is the only condition here that will make me want to consider selling. However, we might likely be seeing a build up before the breakdown happen. very possible. We might likely be seeing a build up before that happen, and we might want to be part of that move even before the breakdown of that demand zone happen. Now, to help us guide our decisions ahead of this move, I want to acknowledge the ascending trend line here since Wednesday's trading session. So if we connect the series of higher lows since Wednesday's trading session, we have a beautiful ascending trend line to work with ahead of today's trading session. So I would like to thicken this a little bit to emphasize its importance at this juncture, and let's do some little adjustments so that it can capture all the pivot lows of these higher lows. Now, with this situation we have here, if we see a situation where price breaks down the ascending trend line and we continue to see that buyers are finding it difficult to climb back above the ascending trend line, reflecting on the chart as continued selling pressure below the ascending trend line and the $1,986.50 level, we might be taking advantage of a bearish move. Now, if we are selling here, please note this, that we are selling above a robust demand zone, so we need to be very careful. So if we are considering selling at the breakdown retest of structure, let's be on standby to protect our sell position, especially as price approaches this demand zone. So ensure you secure your position, as we will need to see how the market will react to that demand zone before we can now start considering maybe we are going to be adding more sell positions or get ready for a bullish move. So if price slices through that demand zone, then we want to feel very confident in our sell position. However, if price continues to find buy pressure again when it comes back here, then you know that we are within buyer's territory, and we want to be looking out for patterns and conditions that supports the idea of buying that asset. So that is how we are going to be managing our positions on the XAUUSD today. So let's see how the market will play out with this current market structure. And trust me, if you wait patiently, exercise patience, and wait for structures to mature, you're definitely going to be smiling to the bank at the end of today's trading session. So these are my views on the XAUUSD. So I do encourage you to mark out these levels and trend lines on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. If you have any questions, feel free to let me know in the comment section while we round off on our trading activities for this week. So it has been a wonderful moment with you guys. Since the beginning of the week, we've been monitoring 4 major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and the XAUUSD, all of which we were able to scoop in some significant amount of profit. And remember, the USTech100 was the most profitable asset on our watch list for this week, as we scooped in over 1,300 pips on that one. On the USOILSPOT, we managed to scoop in over 300 to 400 pips, while on the GBPUSD we have over 150 pips on that one. And on the XAUUSD, though, we're still struggling around 100, which is unusual for an asset as this safe haven. But so far in total, we've done pretty well. And for those of you who are part of our profitable journey this week, congratulations to you guys. Kudos to you for being on standby and patient to capitalize on these opportunities we were able to identify during the sessions. For those of you who are joining us for the first time, I do hope you were able to gain 1 or 2 things from what we discussed here today and for this week. And if you did, I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach in this community, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I wish us all the best of luck for today. I wish you a wonderful weekend, and I look forward to seeing you same time on Monday morning as we get ready for the new week. Do have a wonderful evening, everyone. A wonderful weekend, everyone. And bye-bye.